Hello everyone, today is November 12th, Friday, and on a Friday we usually have to be very careful as it comes into the afternoon because the market is typically slower. This is normal, whether it's crypto, NASDAQ, E-mini, stocks, the market just gets slower as we get into the afternoon generally. I'm going to show you what this long signal using the trade scalper, double wick long, as well as a long signal, what this is all about, how we manage the trade, just giving you a little insight on how we trade the markets using the trade scalper software. Before we begin, remember that trading is risky. Please don't trade with funds you cannot afford to lose. Talk to your broker. There are risks involved with trading. So the trade scalper software is providing us two signals here. Everybody has the same signals, which is good. So we're all seeing the same thing, 46.76 quarter on the E-mini S&P. So what I'm going to do is place here an order to go long at 46.76 quarter or within a tick. Usually losing a tick on market orders is normal, is common. Sometimes you get a better price, but we have to expect there to be a little bit of slippage when using market orders. So you can see here 46.7675 is actually the fill that I got on this trade. Now it comes time to managing the trade. So managing the trade is very important. What's the target? What's the stop? How do we control our risk? When it comes to trading, these are questions that you should ask beforehand. So one of the things that I do and I teach is looking at the current conditions based on the last 4 or 5 candles. That is the ATR, the average true range you see there in the blue on the level window below 1.5 points, which is the equivalent of 6 ticks. So 6 ticks, 1.5 points, I'll just write this down here, is what I'm looking at as a target, and that's a correlation of what the market can give me, what the market can do. So if I wanted 10 ticks or 20 ticks or 5 points, that's wishful thinking. The current conditions don't offer me that type of move. The type of move that the market is giving me, so it's relative. When the market's slow, we look at the ATR value to say what's the target. When the market is more volatile, we look at the ATR value to say let's give a larger profit target and opportunity. But right now it's only 6 ticks or 1.5. 1.5 is the equivalent of 6 ticks. So that's very important to understand the current condition. So I have here a ruler that I put up to show you 1.5 points or 6 ticks. I put the ruler there to know exactly where the market needs to be. And I'm going to get out of the trade at that point. 46.78 quarter is exactly 6 ticks from where I entered. Now the other thing is stops. We have to have stops when we enter into the trade. So having a stop that is overly large in comparison to what I want to make is not a very good thing to do. It's a no-no. So we're looking at a stop relatively close to, a little bit more than the current conditions, but relatively close to that. So don't risk 5 or 6 points on a trade like this. And once the target is hit, immediately exit the trade. So you see the target has been hit. 46.78 quarter is 6 ticks, 1.5, and I should be out of the trade at this point. You can use a market order, you can use a stop order, you can use a market if touched order, you can just exit close on your Superdome or on your chart trader. That's how we manage the trade. And so look at the current conditions. I want a 1.5. When that hits, I click close, or if I have a target already in the control center, I'm out. And that's how we trade the trade scalper. If you have any questions, feel free to give us a call. My name is John Paul. Until next time. If you're new to day trading and want to learn more on the benefits of trading the markets, visit daytrade2win.com, join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.